Before that, we have M&M's Q4 numbers flashing on your screen. So net profit has come in at 1550 crores. This is versus the poll of 1750 crores. So there has been a bit of a miss over there. So let's also bring the stock up for you, and you can see what's going on over there. So like you can see, wasn't holding up too well ahead of its numbers as well. But for now, we have only the net profit number, which is up at around 1500 crores, 1550 crores to be precise, versus the poll that we had, which was around 200 crores more than that. The revenue has come in at 22,570 crores. That is on the revenue number, and on the net profit, like I was pointing out, it definitely looks like there is a bit of a miss. The stock has been doing well, by the way. In the past month, if you look at M&M's number, the M&M stock move, it's up around 5%. The revenue, like I was mentioning, 22,500 crores. So that is actually coming above what we were expecting. But on the profit, there's a miss. We will have to wait by for more details on this. We're also going to try and get Sonia in. On the EBITDA, it's come in at 2797 crores. This is versus the 2916 crores that we had estimated. So a little bit of a miss over there. Margins also have come in a tad lower than we were expecting at 12.4%. This is versus the poll that we had of over 13% on margins. 13.1% is what we were estimating on the margins, and it's come in at 12.4%. Looks like it is a little bit lower than we were expecting. The stock is also giving up a little bit. Sonia is here with more. Sonia, a tad below what we were expecting, right?
Yes, especially on the margin front. Actually, this time the margins were expected to fall compared to what we saw, on a quarter-on-quarter basis as well, because of the higher amount of auto sales and lower amount of tractor sales. Remember, tractors is a low margin business. Tractors is a high margin business, and hence a lower amount of tractor sales would have put pressure on the blended margins, and that was the expectation. But even if you look at it, the preceding 4 quarters, you had margins anywhere between about 11 to 11.9%. It was only in Q3 that the margins came in at 13%, but the 4 quarters before that, the margins for M&M have been in that band of 11.5 to 11.7%. So in that context, it's not bad. It's still stable margins around 11 to 12%. But yes, on a quarter-on-quarter basis, the margins have seen a fall. Remember, let's not forget that it's still a growth of 40%, 45% that you're seeing on the EBITDA front for M&M. So these are strong numbers, just that they are below what the street was estimating. And with the way the stock has gone up, the expectation, there was no real margin for error this time around. Ashwin Patil is with us, so let's get him on board. Ashwin, on the margin front, the EBITDA margin has come in at 12.4%. This compares to 13% last quarter. So on a sequential basis, the margins are lower than what we've seen last quarter. Would that be a disappointment for you, or was it on expected lines? And what about the stock itself? I mean, it's not really reacted to the numbers this time.
Well, the numbers have come in line with everybody's expectations, maybe slightly below the street's expectations, but what we were expecting were definitely we all know that the FES numbers were, sequentially down. The volumes were down for the tractors, definitely, and which is a high margin business. The SUV performance has been, significantly, stronger. So I think definitely these kind of margins were expected from M&M. And I mean, the numbers were quite in line with expectations. There was no big surprise on the positive side or negative side, so the stock is also reacting quite flattish. So the numbers were quite in line with expectations.
Okay. At this price of about 1277, Ashwin, how is the risk reward looking for the stock? Because, give and take everything, last year it was one of the strongest stocks. This year it sort of maintained its gains. But there are some big initiatives that it's taking in the auto space with the, SUV launches, etc., and which have done very well. Do you think there are more margin levers that M&M has, and could these margin levers sort of take the stock higher from here? What is your target price?
See, for M&M, I think the driver last year was the FES business. They have reported good numbers. The tractor cycle has got elongated a bit. But this year, I think that the rural income may get impacted if El Nino really comes, because that's what is expected. So if that happens, then the FES numbers may come, below, not so great in FY24. So that may impact the margins. The main driver of margins are the FES business, but definitely on the auto side also, the launches that the company has been doing in the Bolero family and in the XUV family, they are slightly on the higher margin side. The realizations are higher. So that may give some sort of support, but not too many margin levels we are expecting from these levels, because also the input cost basket is also getting firm. So I think that for margin expansion there is not much of room. Nevertheless, we are having a buy rating on Mahindra and Mahindra with a target close to about 1500. But post these numbers, we will definitely have a look at our estimates.
Okay, I have calculated the farm equipment segment, margins this time, and there is an improvement that we've seen. If you look at the standalone business, right, there is an improvement year on year. The margins for the farm equipment segment have improved to 16.6% compared to 15.6% year on year. Of course, there used to be a time when M&M used to, get 20% margins in the tractor segment, but of course, things have changed a lot since then. You said, Ashwin, that there are no real levers in the FES segment, or which is the tractor segment. But are you happy with these margins at 16.6% for the standalone tractor business?
See, 16.6% margins, that has been, the range over the last, few quarters. But definitely on a YOY basis, if we compare, then these margins were quite good. But, the sequentially, as we spoke before, the margins were, the overall FES numbers were not that attractive. But, that range is not that bad as such. So, a lot much of positive levers we are not expecting on the farm equipment side.
Okay, and in the auto segment, I was just calculating the margins as well. This time around, the auto segment margins have come in at 6.6%. This compares to about 4.8% same time last year. So auto segment margins have also improved year on year. I guess we were expecting that, given that raw material costs have fallen, supply side issues have eased up and demand has picked up. So there is operating leverage there as well. But on both of these segments, right, 16.6% margins for tractor segment and 6.6% margins for the auto segment. Are you factoring in any improvement from here on, or like you said, in FY24 as well, they will be in this range itself?
Yes, see, because of the operating leverage factor, because since the chip shortage is behind us right now, and the volumes, the production as well as the volume, catering to the demand, the pent-up demand which was there since last year, the volumes may move up, and also the operating leverage may come into play. So that might give some of the a leeway for the margins going forward. And in case the El Nino is like anybody's guess, and it may come, it may not come, but if it doesn't happen, then definitely sort of margins on the FES segment has got a good 100 odd bips scope for improvement.
Okay, all right. Thanks a lot, Ashwin, for joining in and giving us an update on the overall M&M numbers. Well, the net profit